Hi everyone, let's go over my bullish and bearish cycle, macro and high time frame Elliott Wave scenarios on Bitcoin. Starting with the cycle bearish scenario where we are looking for a 5-wave impulsive structure to the upside in a wave 1, and now we are looking for a 3-wave corrective structure to the downside in a wave 2. What is interesting though is that this wave 2 is a little bit longer in time than wave 4, and that is not so common, as usually a wave 4 is longer in time than a wave 2, which is something we have to keep in mind. For this wave 2, the maximum target that we're looking for would be the 0.236. On the lower time frames, the most common target for a wave 2 is between the 0.5 and the 786, but on this time frame, that would give you a target between $400 and $20, while also here you can see that for a wave 2 and also here the wave 4, the retracements are very shallow. For this wave 2, we hit the 0.236, and that is the reason why for me that would be an important Fibonacci level at about 6K. Time-wise, it is very common for a wave 2 to end after the 0.382 Fib time taken from the low to the high of wave 1, which is sitting in September 2025. If we then zoom in to this structure over here and we look at this bearish scenario in more detail, we are still looking for another move towards the downside in a wave C. Here we have our final impulsive structure to the upside in 5 waves in a wave 1, and then we're looking for a 3-wave structure to the downside in an A, B, C zigzag. Here for this wave B, we are currently inside important resistance, with the 886 being the maximum target here, around 58-59k for a wave B, and then we'd be looking for a C to the downside where we have incredible support sitting between 11k and 8k. It's the golden pocket taken from the low to the high, as well as the range value area high over here, crossing through the middle of the golden pocket. If you take a trend-based Fib extension from the high to the low of wave A and put it currently on the high over here of the wave B, then you can see that the most common target area for your wave C, being between the 1 and the 1.236, is nicely positioned inside this area. If we then look further inside this wave B over here and go to the daily time frame, then we are looking for a 3-wave structure to the upside. Here we have a zigzag in an ABC. The 0.382 is a common target for a wave B taken from the low to the high of A. Then we're looking for a wave C to the upside. For a wave C, the common target price-wise is between the 1 and the 1.236, 40k to 44.1k. The 1.618, however, is also quite common, so that is why I have it on the chart at 50.1k. Time-wise, this wave C is absolutely good. We are sitting between the 0.618 and the 1.618 while being in the price target area for a wave C. The fibs over here, as well as the Fibonacci times, are taken from the low to the high of A to the low of wave B. Even if price here would take this high and hit the 1.618, there is still the possibility for this move to the upside to be an impulsive structure in a wave C because of this scenario over here. On the daily chart, we are then looking for the yellow 1, 2, 3 ABC in a wave 4 zigzag structure, and then another wave 5 to the upside, where your target area is between 51.6k and 55.6k for then a potential C. Not to forget, we still have the bullish scenarios to come as well, so this scenario can also still be another wave 1 or potentially even a wave 3 in the bullish scenarios. If we go to the cycle bullish scenario, then we are looking for continuation to the upside. Here you can see we have multiple 1-2s on the chart. Bear market here is finished and we are looking for another wave 1 in blue, another 2, and eventually continuation to the upside. Here, if we compare the different wave 1s with one another, we can get a better idea of the time for the all-time high in this blue wave 1. You can see that the yellow wave 1 is a little bit shorter in time compared to the red wave 1 as it went to the 0.786, and the green wave 1 is exactly the same amount of time as the yellow wave 1 as it ended right on top of the 1-to-1 Fib time. Keeping the length of these waves in mind, then the blue wave 1 over here is likely to end between the 0.618 and the 1-to-1, which is between September 2024 and October 2025, with the 786 sitting in March 2025. Price-wise, the target would be between 100k and 180k, and that estimation is done also based on the previous wave 1s. You can see that this wave 1 over here is a little bit shorter on the logarithmic chart compared to the red wave 1, and also the green wave 1 is shorter compared to the yellow wave 1, as both of these wave 1s went to the 0.618 trend-based fib extension that you take from the low to the high of red to the low of this red 2 over here, giving you the 0.618 in yellow, and for the green 0.618 you pull a trend-based fib extension from the low to the high to the low here, toggle on the 0.618 on the log chart, also of course with the logarithmic setting of the Fibonacci, and you will see you have a perfect rejection. However, keeping in mind that the 0.618 is such an important target, I also put it on the chart for the next wave 1 here, sitting at about 100k, and just for a little bit of flexibility I also have the 0.786 on my chart at 180k. The bullish scenario on the weekly time frame is that we have a finished 5-wave impulsive structure, the recent bull market in this green wave 1, WXYXZ to the downside in a wave 2, which by itself is a very rare corrective structure, more so on the higher time frames, and then we are looking for continuation to the upside. There's a few scenarios that we have to keep an eye on when we think about the bullish scenario for new all-time highs. The first one here is a double 1-2, where we have the yellow wave 1 and 2 finished, and then either wave 1 over here is finished and we are looking for a flat structure in a wave 2, or the probabilities are on the side for wave 1 to end over here and then a wave 2 to start. The reason that we're still looking for a bigger retracement to the downside is because so far this corrective structure is very short. If we would finish this second wave 1 over here and we are looking at this to be your finished wave 2, then yes, it hit the 0.382 Fibonacci, which is by the way a less common target for a wave 2, but most importantly it is incredibly short in time. It did not even hit the 0.382 Fib time taken from the low to the high of this wave 1, which usually is a minimum target for a wave 2 in time. So if price makes a new high, we're either looking for a flat structure for a deeper retracement, or we can move this wave 1 to the upside and then look for a bigger corrective structure to the downside in this wave 2. As it stands, pulling the fibs from the low to the high we have over here gives you a target area between the 0.5 and the 786 as the most common target area, between 30k and 37k, and as mentioned, the 382 at 39.8k is a less common target. The 0.382 Fib time, as mentioned, usually a minimum corrective target for a wave 2, is taken from the low to the high over here and sitting on the 19th of February this year. In the second scenario, we are also still looking for a deeper retracement to the downside for pretty much the same reasons, even though the count here is different and we are looking for a wave 4 to the downside instead of a wave 2. What lowers the probabilities for this particular bullish scenario is that it is a very long first impulsive structure to the upside in the green wave 1 here. Especially if this is a wave 1 of a bull market, it is incredibly long compared to previous wave 1s in time. However, it is one that we cannot yet forget because it has not been invalidated. A wave 4 over here, common target area taken from the low to the current high that we have, is between the 0.5 and the 382, 37k, 39.8k, and the 0.618 is an invalidation at 34.1k. After wave 4, we're looking to finish with a wave 5 and then a deeper corrective structure to the downside in a green wave 2. Also above price at the moment is the monthly gap. We now hit it for the third time. We hit it here once, rejection to the downside, hit it twice, little bit of a range on the daily chart, and now we are testing this gap for the third time, really increasing the probabilities for price to fill the gap, where the high of the gap is at 53.3k. Something else I want to show you is this channel over here, taken from the low to the high over here, right, on the logarithmic chart, and as you can see, it is very nicely respected, so it's an interesting one to have on your chart. And if we are looking for a corrective structure in an ABC, we want to see a rejection and eventually continuation to the downside, where the upper side of the channel can be a target. And if we are looking for bullish continuation, we eventually want to get out of this channel towards the upside, and then only later, when we are going to go in a very high time frame wave 4, do we want to see price coming back to the channel. So if we then look at the probabilities of the different scenarios, then on the cycle time frame, probabilities at the moment are neutral. We first have to wait what happens over here because both the bullish and bearish scenario are possible. So we have to wait for local structures to give us more confidence and more probabilities for either up or down. On the macro, the probabilities are slightly bearish just because a WXYXZ corrective structure to the downside is very, very rare, more so on the higher time frames. On the high time frame, the daily chart is moved to the upside here. The probabilities are neutral. This retracement of this range here bounced on the 0.382 Fibonacci taken from the low to the high, which is a less common target for a wave 2. Bit more common for a wave B. However, in the bearish scenario here on the daily chart, we might hit the 1.618, and the 1.618 generally is a minimum target for a wave 3, or at least a more bullish target compared to a bearish wave C. Generally, however, we are looking for a bigger retracement here towards the downside based on all of these scenarios. If we're looking for a wave C, we're looking for a retracement to the downside. If we are looking for this bullish scenario here, looking for a 5, well, then we are still looking for a move towards the downside as well. If we look at this bullish scenario, we're looking for potentially a high of a wave 1, or if 1 is here, we're looking for a flat structure, preferably in a bigger retracement. And in this scenario over here, we're looking also for a 3 and a flat in 4, bigger retracement, or 3 to end here and then a bigger retracement. So generally, the confluence between the different scenarios is that we are eventually looking for a bit of a bigger move towards the downside. However, we might first fill the gap to at least 53.3k, and then we have to look for weakness up here. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.